Welcome back to Halftime. Let's get to our calls of the day. Loop Capital upgrading Netflix to buy and raising its price target to $13.50. Right now, trading at about $12.20. Steve, you own this one. You and I, we actually talked about Netflix before after Paul Tyson. Not a great fight, but about 100 million people viewed that one. This one is about 41 million people. It seems like it's getting harder and harder not to own Netflix if you want to watch these big events. Yeah, so Netflix had come into pressure because of Paramount and Paramount acquiring Warner and those streaming assets. But at the end of the day, it's going to be 1 + 1 is going to equal probably 1, 1.25. Netflix being the clear leader. But regardless, let's say that I'm wrong and Paramount and whoever else they acquire, be it Warner or somebody else, builds a legit streaming service. There's more than enough room for 1, 2, or 3. So Netflix continues most product. I think the stock is reasonably valued here and is upside, and as I love to say, a permanent compounder. Jimmy, you own Disney. Reiterated to outperform at Bernstein at 129. This ascendancy, it seems like, of Netflix, adding so many more live events, whether it's wrestling or boxing, is this a threat to Disney and Disney Plus that, of course, has the Marvel movies and a library of really classic movies, especially for kids, also the Star Wars franchise? They have a lot, but they don't seem to have that same focus on the live events that seem to be drawing viewers. Yeah, I think Steve just said it appropriately, that there's room for more than one player in the sandbox, and Disney, to me, is the clear number 2 within the streaming services. I also think that now we're looking at Disney differently than we've been looking at it over the last 5 years. First, you had to do the turnaround coming out of the pandemic. Then you had to do the transition from linear to streaming. That's done. Streaming is profitable. And frankly, I see a lot of room for earnings expectations to be exceeded on the back of streaming going forward. You're seeing earnings estimates already creeping up higher. I think that will continue. I think it's attractively priced at 18 times. That's below market multiple, obviously, with good growth, not just from streaming, but also from the theme parks. And I'm sorry, I shouldn't have gotten so quickly off of streaming, because remember, Frank, ESPN, their streaming capability is just coming online. And I think there will be uptake. And Netflix also deserves a premium for being the pure play. If you don't want to worry about theme parks, you don't want to worry about cruises, you don't want to worry about movie studios, but instead fund the production of movies, Netflix is the best play. All right, Netflix shares up about 1.75%. We're going to move on to Walmart. Bank of America increasing Walmart's price target to 125, also maintaining its buy rating. Walmart trading at about 106, just under 106 right now. Joe, you own Walmart. Also, Walmart at an all-time high today.
Obviously, I agree with the call. We've owned it in the ETF since October of 2024. They are a clear leader in AI, agentic AI e-commerce, and it's all about really utilizing the technology to buy for the consumer. I don't know if anyone's used on Amazon the Buy For Me button, but this is something that is compelling. It's something that companies who have scale like Walmart are going to be able to deliver a tangible AI product to the consumer. I think Walmart is on its way to $1 trillion market cap. All right, Walmart shares up about 2.33%. One more, Berenberg upgrading AbbVie to a buy, raising its price target to $270. This is a big upgrade, actually. Previous price target was $170. Jim, you own this one. This stock has been solid. And as much as people like to talk about the healthcare industry in general as having been a lousy investment this year, there have been plenty of places like AbbVie where you can select a stock. The price performance has been great. The Humira expiration is well behind them. It's now Skyrizi and Rinvoq. They have no real loss of exclusivity for many years to come. 3% dividend yield, 15 times forward earnings. I mean, this is, you can buy it right here despite the strong price appreciation. Liz, I want to come over to you. What's your just general view on healthcare? Obviously, there's different segments to it. There's the insurers. There's obviously drug companies like AbbVie, which actually analysts pointed out survived one of the biggest patent expirations in history when it comes to drugs. But just in general, when you're looking at this sector, where are you seeing opportunities? Where are you potentially seeing issues? Yeah, well, first of all, opportunity on valuation. I mean, it's up 0.6% in the S&P this year compared to the top sector being up almost 30%. So big underperformance from healthcare. If you're a value investor, this has to have hit your triggers at some point. And not just that. If we're looking at the different segments of healthcare, you think about pharma and biotech, not just in the large cap space, but moving down the cap spectrum. Those are really growthy areas of healthcare, and they can be an option if you're trying to diversify your growth exposure away from mega cap tech. And I think there are some dollars looking to do that, especially on days when the rest of the mega cap tech complex is pulling back. If we could show the XBI while I'm speaking, Steve, you look at this as well. It's up 14% in the quarter. The IBB is up 12%. Very strong performance. And if, in fact, today delivers the type of outcome that has a positive effect on the small cap universe, you look first and foremost towards those biotechs.
Yeah, biotech could benefit from not only rate cuts, but less regulation in D.C. as well. Looking at the XBI right now, up just about 1%. As Joe mentioned, quarter to date, up about 14%.